Welcome to ForexTV.com's Forex Market Buzz. Today is Thursday, January 3rd. I'm Caitlin Sisney. In early afternoon trade, Euro dollar is trading at 147.57. Sterling dollar is trading at 197.42. Dollar yen is trading at 109.38. Taking a look at today's U.S. data releases, U.S. factory orders increased 3 times as fast as expected in November. However, this increase was fueled in large part by orders for non-durable goods, leading economists to see the report as a further sign of weakening economy overall. The Commerce Department reported new factory orders rose 1.5% in November, which is the largest monthly increase since July. Factory orders excluding transportation equipment were up 1.4%, the largest gain since September, and also above expectations for the month. The Labor Department said the number of persons applying for jobless benefits totaled $336,000 last week, down from 21,000 from the previous week, when jobless claims had hit the highest level in more than 2 years. The ADP forecast was for a $40,000 rise in December, above expectations for a 30,000 gain. Although the ADP number is often volatile, it is likely to improve expectations ahead of the release of the actual statistics tomorrow. Joining me today is Greg Michalowski of FXDD. Hello, Greg. Thanks for joining me today.
My pleasure, Caitlin. How are you?
Good, thank you. And after rallying against the dollar yesterday, the yen's gains have now tapered off. Greg, how do you see yen performing against the euro and the dollar ahead of tomorrow's employment data?
Well, the dollar yen has been under pressure. We did have a little bounce today after hitting new lows, and it seems like it might be trying to get some lift off the lows that we hit last night. We're above the, I like to look intraday basis on the 21 bar moving average on the hourly chart. And we just went down and tested it. We're actually testing the level right now, about 109.36. That's going to be a key level for me going into the close today in New York to see if the the Far East comes back in and takes the dollar yen up a little bit from these low levels. You have to understand, in Japan, their economy still is not that robust, and they rely on exports. And if the dollar were to continue to get weak against the yen, they're not going to. They don't really like that happening all that much. So they may come in and support the dollar yen off these low levels tonight in the Far East as we head into the employment number tomorrow. The euro yen has a similar pattern as the dollar yen. It's been selling off quite dramatically. Last night we had a low, and again that bounced off the lows, trading above the 21-hour moving average. Around yesterday's closing level. So, which is the same case for the dollar yen. We still haven't really gotten above yesterday's closing level. So, although it seems like it may have been bottomed off the low for these two currency pairs, it's still sort of a dead cat bounce, if you will, and not really showing a lot of strength to the upside. But we'll see what they do in the Far East tonight.
Okay, now the dollar fell to the lowest in a month against the euro after reports showing euro region money supply held at the fastest pace in 28 years and a greater than expected decline in German unemployment. Greg, how do you expect euro dollar to trade in the short term?
Well, the euro dollar has been sort of waffling up and down with an upward bias. If you look at the chart, it has sort of a wedge pattern to the upside. We have some resistance coming in around the 147.80 level. We need to get through that level, probably get through the 148 level to continue the upward movement in that currency. The euro has been one of the stronger currencies against the pound, against the dollar. It's been a little bit weak against the yen, but that's more as a result of the dollar yen, the yen strength. So anyway, I expect it to, in the shorter term, to continue to remain bid, mainly on the back of, as you say, the data that's been coming out, and the central bank, European Central Bank, doesn't seem like it's in any hurry to ease rates, so they'll probably keep their rates steady in the near term. and that will also be supportive of the currency.
Okay, now the pound fell to a record low against the euro after the Bank of England said lenders will reduce the supply of credit to consumers and companies in the first quarter, threatening to deepen the economic slowdown. Greg, what is your outlook for the euro pound?
The euro sterling has also been on a very strong uptrend lately. It's in an overbought condition on most of the technical. If you look at any of the period from an hourly to a daily, even weekly, seems to be a little bit overbought. Nevertheless, the fundamentals of that pair with the euro keeping, the ECB keeping the rates the same, and sterling, and the UK looking to, possibly again lower their rates next week, should support that currency pair with the euro gaining strength against the pound. In the UK, they're having a little bit more economic problems, and they seem to be more concerned about their growth going forward. They do have the service PMI, which is supposed to come out tomorrow, and if that's showing weakness, then that will just pour fuel on the fire, and we're probably looking for the Bank of England to cut rates on the 10th, if that be the case. So I expect that trend to continue for the euro sterling to continue to move up, but at these levels you got to be a little bit cautious to some short-term correction, but it's still very much supported.
And finally, as crude oil prices continue to rise, the Canadian dollar continues to strengthen. What should traders expect to see from the Canadian dollar?
The Canadian dollar has gotten some strength as a result of oil moving back up to close to $100 a barrel, and if the price can get above the $100 and move higher from there, that is going to continue to support the Canadian dollar. So I expect the market to follow the oil price very closely. We did have the EI data came out, or the energy data came out today, and crude inventories were down once again, greater than expected. So that should be supportive of the crude. Nevertheless, the price is down a little bit right now as we speak. It's probably profit-taking, probably a little bit scared about the $100 level per barrel, and it's going to take a little bit more than just a couple locals, as is well documented, going in and buying a lot or two at the $100 level to see if triggered off stops. So we're going to need some good demand from the bigger players in the market, and then I expect the dollar Canada to move down, and the Canada dollar to get stronger as a result of that.
Okay, thanks for joining me, Greg.
You're quite welcome. Thank you for having me.
And that's all for today's edition of Forex Market Buzz. I'm Caitlin Sisney. Join us again later for PM Exchange right here on ForexTV.com.